Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week. So what's going on today? Well, we got the Dow Jones down about 600, Nasdaq's down about 200. A lot of people would say that's a terrible day in the stock market. And if you're long, it is a terrible day. Now, if you're short, you're kind of doing a little party dance. You're going, yeah, baby. But anyways, I think we still got a little bit more selling to do. Now, we are a little bit oversold here. Maybe the plunge protection team will come in later in the day and save the market, but I think we're still going to retest that February low. I keep saying that, and we're getting down there. It's going to happen, and when we get down there, we're going to start building a base in the market, and then we can move up higher from there. But I do think we're still going to come down and retest that low. That's just my opinion. Okay, so let's move on to the housing market. I want to do something a little bit different today. I don't know if you'll find this fascinating or not fascinating. I find it incredibly fascinating, but I want to take you inside the real estate business. Okay, so we're going to start with Zillow Group here. Now, Zillow Group, they just came out with this announcement today where they downgraded the housing market. Now, Zillow Group had a report out that they expected the housing market to go up 20% a year for the next 2 years. Well, they just downgraded that report. They're only expecting it to go up 15% a year for the next 2 years. Okay, you really can't make this stuff up. It's kind of funny to me. Well, let's think about this. Zillow stock was selling at $200 last year. $200. Now, if you asked a CEO of Zillow, what do you think your stock price is going to do in the next year? He'd probably say it's going to go up 20%. Well, guess what? Zillow stock is now selling for $40 a share, down about 80%. And, Zillow, they did some house flipping and they lost billions and billions of dollars. In the hottest real estate market that the world has ever seen, they lost billions of dollars flipping houses. Fascinating to me. Very fascinating. But they're not the only one. I'm not picking on Zillow. Zillow's a good company for what they do. They're very smart, but they're losing a lot of money right now. Okay, so let's take a look at some of the other real estate brokers. Let's take a look at Redfin, for example. Now, Redfin, they'll charge you a 1% listing fee. That's what they advertise. Call us up. We'll come over and sell your house and charge you a 1% fee. What they don't talk about is the 3% that the other agent gets. So it's really a 4% fee that Redfin's selling you. But their guy only gets 1%. Okay. Now, how is this business model working for them? Well, they pay their agents. They take a 1% fee and they got to pay their agent part of that. Normal split is 60-40, 60% for the agent, 40% for Redfin. That would be a typical split, but Redfin, they pay them, I think, on maybe even an hourly basis. I'm not really sure how they pay them, but they charge a 1% fee. So let's see how their stock's doing. Last year at this time, their stock was trading for $100 share. Not bad, okay. It's trading at $13 a share right now. Now, if I do my math correct, let me think. Down 87% for the year. Once again, the hottest real estate market the world has ever seen, and yet there's a crash in the brokerage houses. There's a crash. Redfin selling at $100 last year, selling at $13 right now. Okay, buy all you want, but it may be going lower. Let's talk about this a little bit. All right, here's one of my favorite ones. There's this company called Compass. Compass just went public last year. Now, how did Compass go public? Look, they just started from scratch, and what did they do? Well, they'd call up brokers like myself, and they'd say, Mike, on $1 million house, how much commission do you get? And I go, well, I get 30 grand. I get 3%, my side, right? Now, let's say I work for Keller Williams or someone else. They'd have to give a split with Keller Williams. So of that $30,000, maybe I only get $20,000. Keller Williams gets $10,000. Well, what Compass did was they told all the top agents. Now, if you were a top agent, I am not one of those that they contacted, but if you were making over $1 million in commission, they'd call you up and they go, Mike, well, you make $30,000 on a $1 million property when you sell it. we're going to pay you $40,000. We're going to pay you more money than you bring in, okay? So you bring in $30,000, you get to keep all your money, plus we're going to pay you $10,000 more. And agents, they were flipping over to Compass. They're going, hey, I'm leaving Keller Williams. I'm going to go to Compass. Well, Keller Williams actually sued Compass for unfair business practices of paying agents more than the commission was. Very fascinating, very fascinating. But anyways, Compass, their revenues went like this, right? But their profits went like this. Well, what did they do? When you're not making any money, what do? You take the company public. You take them public, right? That's all you can do. You dump it on the unsuspecting American public. And of course, they took it public last year, they took it public at like $20 a share. These are rough numbers. They're not exact. I would go with $20 a share. And that was roughly worth about $10 billion. Oh, they made some good money. The heads of the company, everybody was pocketing money like crazy. Well, guess what? Their business model's not sustainable because you can't pay agents more than they bring in. It's impossible to do on a long-term basis. But they had all this venture capital money that they had to figure a way to build the company and get rid of the money. Well, the money's kind of gone now, and their stock went from $20 when they dumped it on the open market to the unsuspecting public. Let's call them the bag holders. When they dumped it to the bag holders at $20, now it sells for $5. Now, to me, that's a 75% off sale. That's a crash in that brokerage firm, a crash in the housing market, so to speak, but not the housing market per se. Now, there's another company. It's another brokerage firm. Some of you may have heard of it. It's called Exp Realty. Now, Exp Realty, it's kind of a multi-level real estate company. Now, look, if I worked for Exp Realty and you were a real estate agent, I went and got you and brought you into the company, I would be getting part of your commission. And if you brought people in, and then I'd be getting part of their commission. So they were a multi-level marketing real estate company. And this was hot, man. All the agents, they're flipping over to EXP. EXP does not have physical offices. They might have a couple, but they are virtual. So you work out of your house and you sell the real estate, right? So EXP, it was multi-level marketing built in with real estate. I mean, they were a disruptor in the industry. All the agents were switching over to EXP, and they were the fastest growing with the agent count. Now, last year at this time, approximate numbers again, Exp stock was trading at $90 a share. And every time you made a sale, they give you a couple shares of the stock also as a bonus. All right, so it was at $90 a share. Well, what's it trading at a year later? In the hottest real estate market in the history of the world, Exp went from $90 down to $15. That's where it's trading today. You can buy all you want. So I'm not sure how the morale is in that company, but if I had a lot invested and I just lost, what is that, about 80% loss in my stock, my savings account, I'd be a little bit upset. But that was fascinating, right? That's how the real estate business works. There's been a crash in the brokerages. That's what I want you to know. There's been this crash in the brokerage houses. There's been a crash in the Zillow Group. There's been a crash in Open Door down about 80%. Let's take a look at the home builders, Home Brothers, Toll Brothers. Look at Toll Brothers is off just this year, from January till now, they're down about 30%. That's approximate number. Down about 30%. They were trading at $75. Now they're trading at $46. Lennar, the biggest home builder in the United States, they were trading at $120 on like back in January. Now they're trading down at $78. Once again, a 30% crash in the home builders. Now, why is all these stocks going down? Why are the house flippers, Zillow and Open Door going down? Why are the real estate brokerages, they're all crashing? Why are the home builders down 30% just this year? Look at Home Depot. They're a home improvement company. They're off 25% just for the year. They're exceeding the market down. They're beating the market on the downward trend. This is where there's a these are just signs, okay? That's my point for today. These are signs of what's really going on in the housing market. Now, yeah, in your area, the housing prices may still be high, but believe me, they're going to be like these companies. They're going to come down 30 to 80%, probably in the middle somewhere, probably right around 50%. Now, this is just my opinion. I'm a real estate broker, and I'm sure you're a real estate agent listening to this, and you're working for one of these companies. You're probably not all happy with me telling the inside secret, but people got to know what's going on inside of the real estate market. Now, I'm an economist, I'm a stock market gambler, and I'm a real estate broker. So when you put all this together, you see just one thing coming, and that's a big crash coming in the housing market. Now, like I say, it takes time to play out. It takes maybe a year, maybe 2 years even to play out. There's some bargains coming, I'm telling you, but inside of the real estate market right now, we are getting this big swooshing sound downward, and this is it's just the front runner to what houses will do later on in this year into next year. I do not think Zillow Group is right that house prices will be 15% higher a year from now and another 15% after that. I think they're dead wrong, but they got right to have their opinion. I'm not saying they can't have their opinion. It just makes me chuckle a little bit. You know, I've been around longer than Zillow Group's been in business. Yeah, I'm telling you, I've seen this movie before. There's cycles in real estate, the up, the down, the up, the down. So don't buy into this fear of missing out. I know that you get out there and you go, this is my last chance to buy a house. I'll never be able to buy one again. Well, guess what? You're going to get another chance, and you're going to get a bargain. I'm Tall Mike. If you like this stuff, give me the thumbs up. You really like it, punch that subscribe button. Everybody have a great weekend. We'll talk again next week. Bye-bye now.